All right, so guys, can you see my screen? Okay, I'm sharing my screen too. All right, so can you see my screen now?
I see.
All right, guys. All right, so let's move on. Okay, so welcome everyone. Welcome to ET Forex Academy. My name is Ishola Manuel, and I'm the founder of ET Forex Academy. All right, I'm a financial market coach. I'm also a forex, stock, and cryptocurrency trader. All right, so for those of you watching this now on YouTube, please kindly hit the subscribe button, turn on the notification bell so that you can get notified once I drop a new content about the financial market. Also, if you love this video, don't forget to give it a thumbs up. It means a lot to the academic. And drop your questions and your suggestions in the comment section below. All right, thank you so much, guys. So having said this, let's go to what we have today. All right, so understanding the financial market, that is the series we began, and tonight we are going to be looking at this is why you keep losing money while trading the forex market. All right, so that's what we'll be looking at tonight, why you keep losing money while trading forex. All right, a lot of people thought forex is a scam. A lot of people thought forex is reached, like is there's a lot of wicked activities and the rest. Yeah, I agree there are. Okay, but I thought I used to think that way too some times ago. Okay, and I'm not saying there's no wickedness there, but the wickedness per se is because you don't really understand how it works. Okay, and that's the reason why you said people there's wickedness. All right, they tend to take your money. All right, when you put money you lose it, and you keep doing it and keep doing it and keep doing it, and you kept losing money, and you feel like, well, I think this is not the road for me, let me just quit and start something else. All right, so if you are in that category, or if you are actually having that challenge right now, I want to tell you, don't quit. Okay, don't quit. All right, this section is going to change your mindset about forex, and it's going to open your eyes to what you have been doing wrong that you need to start to correct so that you can have profits in the forex market. Okay, so having said this, let's move on. All right, so last week, all right, so in our last series, rather, we talked about what the financial market is. And for those of you watching this on the YouTube right now, I just want to quickly brush through it. You might be a professional trader, an intermediate trader, or a beginner trader. All right, so please just bear with me for those that are beginner trader. All right, that are watching this right now. And if you already know this, you can just fast forward this part to where we start the section. So what is the financial market? All right, the financial market includes any place or system that provides buyers and sellers the means to trade financial instruments, including bonds, equity, the various international currencies, and derivatives. All right, so that's what basically the financial market is when you hear the word financial market. Also, you should see a link now to our previous series at the top right corner right now. If you want to watch what is financial market, we did that series sometimes ago. Click that link now and go watch it before watching this one, so you have a better understanding. Okay, so also a financial market is a market in which people trade financial securities and derivatives at low transaction cost. All right, some of the security includes stocks and bonds, raw materials, precious metals, which are known in the financial market as commodities. All right, so example of financial markets include stock markets, forex market, bond market, commodities market, and the last one, which is the latest and the newest, cryptocurrency market. But tonight we are going to be focusing on the forex market. So let's move on. Okay, so before then, I wanted to know that forex markets are being traded, all right, by some certain people. All right, they are called financial institutes. So I just want to let you know some things about the financial institute. So a financial institute is a company that focuses on dealing with financial transactions such as investments, loans, and deposits. All right, so we get to some of those financial institutes. in no time. All right. So, but just know that financial institutes are those that are focused or that deals with financial transactions. So, in all of that, let's go to what we have today. Okay. So, the forex market. Okay. The forex market is a global place where people, and when I mean people, investors and traders, all right, like you and I, buy and sell foreign currencies. Okay. So as of 2019, the daily volume that has been traded in the forex market is about $6.6 trillion. All right, guys. Even the world richest man is not even as is not even up to $1.000 trillion. So the money inside forex markets each day is $6.6 trillion, which means your money and my money is in that market. And no matter where you are, no matter your color, your race, your tribe, you can make money from this pool. Okay, so I want to establish that mentality in you right now. And if you know that before, all right, congratulations. So let's move on. Now, who are the players in the forex market? I want you to know this, all right, because I need to establish these facts for you before I move to why you are losing money in the forex market. So remember, our series is understanding the financial market. So who are the players in the forex market? In case you have not really considered this, we have what different people trading the forex market. You aren't the only one trading. Neither is the bank, neither are banks the only one what trading. Okay, so we have different types. Number one, we have retail traders, which is you and I, all right, they're just having little volume in the market, not quite a big volume. Those are what retail traders. And number two, we have bank sectors, all right, we have different banks trading as their way of making money, way of making profit. So banks also what trade the financial market, especially the forex market. All right, number three, which is going to shock you, is that what your government, all right, the government of your country also trade the forex market. Tonight is not just the night for me to unveil how the government do this. Okay, I would have loved to unveil how the government also trade, but I will make a video on that very soon. So your government also trade the financial market. In fact, if they want to reduce the price of their currency, they have the way to do it. If they want to increase the value of their currency, they have a way to do it. So you have to also know that your government also play a part in forex market. And the last and the most stronger, if you notice, you will see that it's bigger than the rest. All right, is are the institution traders. All right, guys, and these are the people we are going to be focusing on tonight. Okay, the institution traders. All right, so these four people play a crucial role in the forex market. They play crucial role in the forex market. But tonight, like I said, we are going to be looking at the last one. All right. So now this is the reason why you are losing money. All right. So we have entered the real game right now. So if you've not been paying attention before, pay attention right now. Get your bio, get your notes, and start jotting things down. Okay. Now, this is the reason why you are losing money. Okay. And the only reason why you are losing money right now is because what you are trying to remove the institutions out of the equation. All right. I've seen a lot of traders or a trend line, support and resistance. All right. Head and shoulder pattern and the rest indicators. Okay, I'm not saying their strategy is bad. As a matter of fact, no strategy is bad. All right, every strategy is good. It just depends on the person using the strategy. All right, so every strategy is good. All right, but more to it is that most of the people using this strategy approaches the market as if they are the one making the dictation. Okay, so if you are in that situation, just type nine in a Telegram group. Say just type I, or just type fire emoji. All right, just type fire emoji. Let me see some fire emoji. Okay, let me see some fire emoji. Let me see some fire emoji. All right, all right, all right, all right. So, like I said, those most people using the strategy, support and resistance, trend line, and the rest are what they remove. They trade as if they are the one dictating in the market. And let me tell you, the number one people that make dictation in the market are the institution traders. Write that down. Like write it down. Don't forget it. The number one people, or yeah, or the number one or fame. All right, I call them people because institutions are not just one, they are much. Okay, that's why I said number one people. All right, that makes the move, all right, that makes the move happen, that makes the price either go up or down, that makes the price either range, are who? The institution traders. So those are the people that make things happen in the financial market, especially the forex market. So if you don't want to lose money in the market, you have to number one, consider them. Number two, you have to what? Reference them. All right. And number three, you have to sometimes think like them. All right. I didn't say most of the time, all right, because you are not an institution trader, but sometimes you have to what? Think like them. And I'm going to be showing you what I mean in a few minutes. All right. So you have to think like the institutions. Okay. What would they do? Because the institutions don't trade like the retailers. All right. What they want is most of the time. All right. That what they want is to gather enough of liquidity. All right. They need to catch some liquidity, and that's when people start saying that forex market is a scam. They took my money, I blew my account. It's because you don't understand where they want to get the liquidity. Right. So that's why most of the time when you enter the market, it might be the moment where they are looking for that liquidity, and once they get it, the market move. And if you're not in the right direction, the market will move against you, and you feel like, oh, what is happening? I think I should just quit forex, or I should not do forex again. I should just go and rest. No, that's not the case. You are not getting it. I once thought like that. Like I used to think like that too. But I sat myself down and I was like, people are making it in forex, all right, real time, not faking it. People are making it in forex. They're buying house with it, buying cars with it, building houses with it, enjoying life with it, traveling around the world, living their dreams. That means this thing works. I've not just discovered what I'm missing. I'm missing an equation. I'm missing is it either a symbol, or I'm missing either a number that's supposed to give me the correct answer. And guys, the answer I got was institutions. Okay, I'm still going to be making a lot of videos about them. In fact, most of our strategy is going to be about them. All right, but I need to let you know this. Okay, so you need to know that institutions play a major role in the forex market. All right, so I think I'm able to explain this enough. All right, let's move on. All right, since I wanted to know the things you should know about institution traders. All right, but before then, I would like to show you some things. All right, example of people that move the market. Okay, so for example, we have JP Morgan. All right, so we have JP Morgan, and I want to take you to the site right now. So JP Morgan site. Okay, so this for Nigeria. All right, let's just use the Wikipedia stuff here. All right, so you can see jpmorgan.com. All right, it's an American multinational investment bank and financial service holding company. All right, headquartered in New York the rest. All right. So JP Morgan, as of I think 2009 or 19, they has the highest percentage of of the volume in the market. All right. And what do I mean? Let's do some things. Let me take you back here and let's do some quick calculation. All right. So for example, JP Morgan, a bank, owns out of 100%, it controls 11% of the market. Okay. And hope you guys can see my screen. Please respond.
Yes, I can see it.
All right, so let's go. So let's say Citibank, because they're also a bank. Citibank has 8%, guys. They have 8%. Okay. And let's say Swiss Bank. Swiss Bank has, this is just an illustration. Let's say Swiss Bank has 5%. And the others, they share the percent in their different ratio. So this is where I'm going. All right. So if Citibank has 11%, all right, and Citibank said they want to sell, and they sold 40 million contracts, that's $40 million contract. Okay. All right. And this one now decides, okay, all right, okay, let me just ask you some questions. All right, if Citibank, JP Morgan sell 40 million contracts, what do you think will happen to the market? Talk to me, guys.
I think it's gonna come down.
Okay, that's it. Any other one? Any other person with any contribution? Hello? Okay, let's just move on. So you are right, God bless. Well, it's going to what? It's going to come down. Why? Because JP Morgan has the highest percentage in the forex market. So if most of the rest, Citibank, Swiss Bank, and every other banks and institutions, pension funds, the rest loan fund, they will have to what? Wait. Okay, I'm still gonna get there. Maybe I shouldn't be fast. Okay. So let me take you now to number one. All right, things you should know about institution traders. Number one, the institution traders doesn't trade lot size. You can write that down, guys. This is going to change your trading life. I'm telling you. The institution doesn't trade lot size. They trade contracts. This is what they trade. They trade contract, guys. All right, so when you are trading lot size 0.001, 1.0, 2.0, 0.01, or 0.10, all right, they are not doing that. Okay, they are trading contracts. This is what they are trading, contract. But you thought they're trading lot size, and you are trying to like, okay, I'll use 0.01 lot size, and you want to use 0.01 lot size to control 40 million contracts, guys. That's absurd. These people are controlling the market. So if they are selling, you are now using your 0.01 to buy. That means you've actually missed it. They are selling, you are using your 0.01 to buy. You've missed it all the way. Okay. So they are not selling, they are not trading lot size. They trade contract. So if JP Morgan decides to sell 40 million contracts, the market will fall, because they have the highest percentage in the market. So the market will definitely fall. So that's the number one thing you need to know, is that you have to trade in the direction that the institutions have laid down. Okay, write it down. Trade in the direction that the institutions have laid down. Okay, so and how do you do it? It starts from what? Monthly time frame, and I'm going to go there in the second point. Okay, so it starts from what? Monthly time frame. All right, so you need to trade in the direction that the institutions have laid down. And let me go to my chart. Let me show you what I mean here. Let's go to chart. And guys, pick a currency, guys. Just pick any currency. Just pick any currency. Let's check. Let's check. Who is there?
Um, USD Swiss franc.
Okay, that's USD chef.
Okay.
Okay. So let's use USD chef. Okay, let me remove this indicator for now. All right, so we go to our monthly time frame. All right, so I said you start from the monthly. All right, you check what is happening in the monthly. All right, we are still doing intraday trading. All right, so you don't have to worry. Okay, so because there's not much data here. All right, so now let's go to the second point because we are starting from monthly. All right, so the second point is the institution trade order flow. They don't trade or retailer strategy. All right. What do I mean by that? Like I said earlier on, institutions don't trade trade lines. They don't trade support and resistance. They don't trade all those head and shoulders that you guys know. They are good for retail traders. I'm not saying they are. I'm not saying they are bad. They are good, but I wanted to understand that they don't trade such strategies. All right. What they trade is what order flow. Write it down. Order flow. You need to know it. All right. If you're on YouTube channel watching this right now, I believe you are enjoying it. All right. So please kindly subscribe if you haven't. Turn on the notification bell if you want to keep enjoying such uh interesting topics like this, and also give us a thumbs up if you are loving this content. All right. So like I said, the institution would trade order flows. All right. And what do I mean? Now let's go to our chart. So I say order flow starts for months on the monthly time frame. This is not a full tutorial on order flow. I'll still do that. So check out our videos on that. But let me just give you some clues on order flow. All right. So what I mean by order flow, you can see clearly now, right, that this market is a downtrend. All right. The market was in a downtrend. Isn't that so? All right. Yeah. So the market was in a downtrend. All right, so because there isn't too much data here. All right, if there was much data, the order flow should have started around there. But because there's no data, let me pick. Let me just look for one. Okay, so this is what an order flow is. All right, so the order started from here. All right, this is what a rally based drop. Okay, so this last bullish candle. So if someone is talking, you can kindly mute yourself. All right. So this last bullish candle started this order flow. So let's say, let me put a text here. Let's say JP Morgan. All right. Who has the largest percentage? Decide to what? Sell 40 million contracts. Okay. So decide to what? Sell 40 million contracts. All right. You can see now, they sell 40 million contracts. The market was sold. Fine. All right. Market sold to this place. Okay. So now, when it reaches here, they will need to what? Some of them need to what? Take profits. Okay. So they took some profits back to this order flow. So this is where the order started. The order for, let's just imagine, okay, the order for this started here. So this become what? Your supply zone. This become your supply zone, because this is where the order to sell started from. All right, but since now they now started this order to sell, this will now take me to our next point that you need to take notes. Okay, which is what? Institutions don't just buy, they buy and sell at discount price, guys. Discount price. They buy and sell and discount price. So it's just a normal day-to-day transaction when when any e-commerce store will say, okay, get this at a discount price and you want to rush into it. That's how it happens also in forex market. Even though you are viewing the chart, that is how it happens. Okay, so they don't just buy or sell, they buy and sell at the discount price. So you need to start watching out for that discount price. All right, and let's go back to our chart. When we talk about the discount price, that is where our Fibonacci was started from. Okay, so that's when you see, okay, the market retraces 50%, 68%. So if you have to map out this is the high and this is the low. Okay, all right, so you can see clearly that this market came back into this order flow, because the market will surely come back to the order flow here, because this is the supply region, supply zone. This is where the supply started from. So you have to, if you miss this first, you don't have to kill yourself like, oh, you have missed it. This is where a lot of retail traders start from. Even when you go on a lower time frame, okay, because this works on all the time frame. Even when you go on a lower time frame, you don't have to start crying or start having FOMO, the fear of missing out. No, if this flow started from here and you've identified it, it will surely what come back to this level. The flow will surely come back to this level. So you have to wait for it to come back to the supply region. And you can do that by using your Fibonacci too. Fibonacci. And you can see it came back to 78% or 71%, or anyone you want to call it. It came back to the 78%. And after that, what? They sell. So this now became, this 78% now became what? The discount price. So you have to wait for the discount price, guy. Either you are buying or you are selling. You have to wait for the discount price. So this is what the discount price that they want to sell. All right. So they give them a discount price. JP Morgan gave them the discount price because they started the move and they gave them the discount price. And you see what you see? The market sold. Are you following me, guys?
Yes, sir.
All right. Okay. So after they give this discount price, you also notice that what we have, what an order flow again. We have a supply region again. All right. So you can clear this off. This line, I mean. Okay. So in this place, Swiss Bank, let's say Citibank enter here. Citibank. Okay. Citibank has entered here. All right, they've sold, joining JP Morgan because they did not close all their order. They sold it. All right. So other banks too, they are waiting. All right, they need to wait. So Citibank and JP Morgan, we have to give them discount. So they are waiting for discount price. Okay. In between all these people, all this thing now, all this move, in some retail now will be buying. They keep buying, they keep buying. Like some of them will say, okay, I see buy opportunity. Why they don't know that this flow is a sell. You have to be selling this market, not buying, and they will keep getting stopped out all the time. And they think, okay, something is happening. Oh, forex market is not my thing. Forex doesn't like me. No, you are doing the wrong thing. So I believe I'm giving you something. I'm giving you value now. All right. So, like I said, you afterwards wait for them to create this. When they created it, they came back and sell at the discount price. All right. So, all right. If you understand that Elliott wave, you will not believe it that, okay, let's say this is the first wave. All right, this is the second wave, because second wave is always longer than the first. All right, and they're coming up to create the last wave, which is going to be the longest wave. I'm waiting for this to come here, guys. When I see this come here, I'm selling this massively, like massively. I don't even know where it's going to reach to, but I'm selling it massively to the downside. All right. So let's continue with what we have. So we've created another order here. So what can you do? Pick your Fibonacci, place it here. Okay, the lowest and the high. All right. So you can see now that this market is getting rejected at 0.618, but I still want to. It should still come back to this sell, because this is the supply zone. So it must come back to either 78 78.1, 78%. All right, so that's where we are expecting to sell this market, because that's where the discount price is, and that's where a lot of bank will start selling. So let's say the last bank, which is Swiss Bank, is already waiting here. Swiss Bank. All right, so they're already waiting to sell here. So once you get it, they are selling. So you believe me that if because this is a swing trading approach, it also applied on a daily time frame, like intraday strategy. Today is not a course on that. All right, I will make a video on that shortly. All right, so you can check our playlist, or you can check the list of videos in our channels to watch that video. All right, so you can see this market was going down. All right, so this is a selling market. There's no need to be looking for buying opportunity. You are selling, you are selling. So when the market will come back here, you also will sell again and continue in that direction. All right, so I believe you've gained value from that. So let's move to the fourth point, which is they don't trade aggressively. They wait for trades. They don't trade aggressively, guys. You have to know that institution traders don't trade aggressively. They wait for what? Trades. Okay, so that's why I said what they wait. Like, they don't do all this, hey, I'm missing out. No, they wait. All right, which brings me to the point that you need to be like I said, you need to be what? You need to be wise. Yeah, sorry for that. You need to think like the smart traders. You need to sometimes think like them. Wait the way they wait. Be patient with them. All right, and you are going to make massive money the way they trade. So they don't trade aggressively, like, hey, I bought here, let me sell, I'm missing out. No, they know where they are trading, they know the zones. Okay, so that's why I'm showing you all those points too, so that you too can know the zones and get yourself ready to enter into the market. Okay, so let's move to the other point. Oh, sorry about that. All right. So the other part is the other point rather is that they trade zones. Okay. So institution traders, they trade zones. So I need you to get it, that the institution traders trade zones. I need you to get it. Like I said, we have supply zone. We have also the demand zone. So the institution traders, they trade zones. And the last one is that was they control the market. So the institution traders controls the market. You need to know that they controls the market. They are the one that dictates what the markets will do. Okay, so you need to understand that they are the one who dictates what the market should do. So you need to follow what they are doing, not you trying to create what should happen in the market, because you don't have the power to create what is happening in the market. So you just need to join them and benefit from what is happening in the market. So that's what I want to share with you guys tonight. All right, and I know you guys will have questions. So please kindly let me know what are the questions that you have.
Okay, Leonis, from the chart, from the illustration you
Okay.
made, from the illustration you made on the chart, um, yes, when JJ Morgan sold the contract size and Citibank joined in that contract size. Okay, now
Yes.
when the price finally moved back up, is it that other banks join in this market? That's why it's making a shabby movement now, like a range movement.
Okay. So this all right, can I answer your question now?
Yes, sir.
All right. So whenever a position or an order is being opened, all right, there will be a point where they want to take profit. Okay. So when JP Morgan opened this sale, when they got here, all this move that you are seeing where they are take profits. So they were closing their orders little by little. All right. There's this C of COT, that's commitment of traders. Okay, it's happened. All right. Like if you see here, Canada dollars. All right. So this long position, this short position, if you see, like since last week now, 2 weeks ago, they opened 8.8 thousand. contracts, all right, to buy, and they sold that 58 contracts, all right. But if you see in the next week, they removed, they removed 427. That means they removed 427 from their contract. So that means they were taking the profits. They took 427 profit, and that's why when you come to your chart, you will see a retracement like this. All right, because they were taking profit. All right, the one they sold to, you can see this one they added more sell. So they removed buy, they added what? More sell. So when they remove the buy, the market starts what? Start to sell. All right. So whenever they sell, they will afterwards take their profit. And when they take their profit, that's when you see this move. All right. So when this move is happening because they are taking their profits, their action is not in this market. All right. So anytime you see this move like this, just know that institution action is not in that market. Okay. And some people used to call it this the impulse trade, this is the corrective wave. All right, impulse trade, corrective trade, or impulse wave. This is the impulse wave. All right, this impulse wave, and this is the corrective. Okay. All right, and we can have impulse, corrective. You get it now? So anytime you see a choppy movement like this, it's because their action is not in this market, so you don't want to trade this market. Even if you go on a lower time frame, now we know that this market is going up. All right, so you can see in this region like this, the institutions action is not in this market. All right, they are not, because they're already taking their profit, so their action is not actually selling it. The market is struggling, is struggling. All right. And I know, some of us cannot wait for 1 month and the rest. Okay. And like I said, tonight is not enough for me to be showing you the way you can even trade this correction. That's correction, the corrective wave. I mean this, the corrective wave, where we just be looking for buy opportunities alone, no sell opportunities. Okay. Tonight is not for that, but it can happen. But what I just want you to understand first of all is for you to be able to catch that impulsive waves, because that's where the deal is, that's where the money is, and you won't be afraid of being stopped out of the market. So did I answer your question?
Yes, sir, very well. I'm clear on it.
Uh, okay, all right, that's great. Any more questions? All right, guys. I believe that's it. Thank you so much for staying tuned and for watching this on our channel. Please, if you haven't subscribed, kindly hit the subscribe button right now and give this video a thumbs up. All right. Also, drop your questions and your comments in the comment section below. It's going to be attended to unfailingly and as soon as possible. Thank you, Ishulai Manuel. All right, and I'm catch you in the next video. Thank you so much.